Hello everyone and welcome to my channel. Today I want to talk about Elliot wave pattern and strategy. Uh, I want to give you a simple explanation of what the Elliot wave is and how to use that in your trades. The most important thing when you're working with patterns is that you should make yourself familiar with the shape and steps of formation of each pattern. A bit of background about this pattern. Ralph Nelson Elliot, back in 1930s, developed this theory. Based on his theory, price movement are very predictable because a large group of people behave in a predictable way. Okay, so he created this theory based on psychology of people's behavior. You probably heard of herd mentality. I will explain this a bit more. Every crowd psychology moves between phases of optimism and pessimism. And that is how a revolution in the bigger picture happens in a country. Okay, so we're not going to talk about that anyway here. Moments of joy and sadness comes one after another. This is part of human nature that we want to explain in the financial market. Now, I want to say something in bracket. Uh, I'm a guy who believes in the technical analysis and also fundamental analysis. I study many things, many ratios, many news. So I'm not gonna just decide based on one theory or one um, analysis in my own trades. Uh, but my trades is the outcome of many other factors that I have in my strategy. Anyway, but if you want to use just Elliott wave as a strategy, it works. And most of the time you can get something out of it, and at the end of the day, if you put your emotions away, you're gonna be successful. Uh, so when we are using Elliott wave theory, we want to figure out if a stock follows predictable pattern or not. Okay? I'm saying predictable pattern because this pattern, as you see here, uh, is the Elliott wave. In Elliott wave, we have 5 waves or 5 points, we should call it. So the wave 1 is the start of the pattern. Probably that happens after trend reversal or whatever, okay? Or continuation of the previous trend. We have wave 3, which is the longest wave. It can't be shorter than wave 1 or wave 5. And as, for example, here, because we are in an uptrend, so 0.4 can't be lower than 0.1. So these are some rules that you should bear in mind when looking for a pattern, for this pattern especially. So during the first wave of the move, what happens? Not many people notice the new trend. If you believe that this could be the start of another pattern, or based on your analysis, that okay, I'm using such an indicator, and it says that okay, this is a good point for trend reversal or whatever, then it's good if you know this pattern. If you believe that this could be the start of another pattern, then you can jump in on time. 2. The pullback is very important, as this will confirm the new trend, but by point 2 being above point 1. So you notice the trend reversal or whatever, or continuation of the current trend, then did you jump in. On each move upward, we have pullbacks. So you will see the pullback. You just keep analyzing the situations, and then you see that pullback finishes somewhere above this start point, then it goes back up. So that's a very good indication that the uptrend is resumed. And now you've got the chance to set up your trades based on Elliott wave, okay? Because the wave 3 is the longest wave. Maybe on this photo it's not that obvious, but anyway, the wave 3 should be always the longest one, okay? So look for the signs for the end of pullback and catch the train for the next wave, which is the most important one, or wave 3. Wave 3 is the biggest wave, and you can make the most out of it by following the pattern. So the fact that the crowd now notices the pattern is something real that makes this wave a bigger. So, you know, people notice, oh yeah, now we are in an uptrend. So they start following the trend. They start jumping in. That's something that helps this wave gets bigger and bigger. So crowd are moving that way. Then second pullback, and again trend will resume after the end of the pullback. This is the time that every man and his dog is talking about this stock, and the fact that we should buy it, or which anyway, if you can buy it at earlier stages of last wave, still good. But if you go to the middle or end of the wave and you still buy it, then you lose. And because most of the people join at the end normally, that's the reason why most of the people are the losers anyway. There are some other facts. I shouldn't say facts. Some other good points about Elliott wave charts. Every leg up, wave up, has its own smaller waves. Okay, so if we are on wave 1, that wave 1 includes another 5 smaller waves. And you know, the pullbacks normally has a pattern, but not always like that, like this. You know, sometimes it has a wedge opening, or you know, triangle, or different patterns. You know, so or sometimes they don't follow any pattern. The pullbacks are very unpredictable, because that's when, you know, many people decide to just pull out of this stock, and it's very unpredictable, and it's not following a pattern when it goes down. It follows a pattern, but you know, different patterns. As I said, can be triangle, can be again waves, or whatever. Using Fibonacci numbers. I'm a fan of Fibonacci numbers. Fibonacci numbers will help you to trace the waves more accurately. So wave 3 and 5 are called impulsive waves in Elliott wave, and Fibonacci ratio is useful to measure the target of a wave's move within an Elliott wave pattern. So, for example, in impulsive waves, wave 2 is typically 50%, or 61.8, 76.4. You know, these are the Fibonacci numbers of wave 1. Wave 3 typically is the extension of 161% Fibonacci of wave 1. And you know, these numbers very helpful. So many times they help you to put a take profit or put a stop loss for your uh, positions. Okay, let me go back to charts. Just to make it clear, I decided to use Renko charts first. So you can see this is Renko charts. In Renko charts, you know, it's different from the normal candlestick charts. I have a video about Renko charts if you want to go and have a look. It's based on the block size and you know the time axis of the chart is not the normal time axis, and it's you know different. One block may just takes a few minutes to fill, but the other block may take a month or a few months to fill. So that's why these time frame time axis is not a nice and equal time frame. Okay, that's something else. You can go and have a look at my other videos, other video about Renko chart. We are looking at SPX 500, S&P 500 index, and we are on daily charts. So when we say Elliott wave, you can see that very nicely here. Okay, this is the point of trend reversal. When you see, maybe it's a good idea if I add some annotation, although it's very hard to add these things on eToro charts. So this would be wave 1. Then we pull back here to wave 2. And then the third wave is the biggest one. You can see here very obviously. 1, 2, 3. Then another pullback, which is 4. And the last wave, which sorry, this one, we call it 5. Okay. Then you may have a trend reversal, or then after that you may see another pattern going up again. Again, you can see 1, 2, and 3 is bigger than 1, and again 4, 5, and these things just keep going. So it's very good if you know these numbers. As you can see here, wave 1 is equal to wave 5, not equal, you know, just roughly. So those numbers that we talk about, you know, the numbers, wave 5 is typically 1.236 to 1.618 of wave 4, and equal to wave 1, or you know. So these things are giving you an idea of guessing the length of each wave. So this is very nice if you just combine the Fibonacci with your Elliott wave trading strategy. Yeah, if you go and draw maybe Fibonacci. Here, for example, you can see that number, wave 3, the 61%, and also the other way, the 138. You can see very nicely matches these numbers, but the thing is you should draw on the first, then just see the extension. On many other applications, many other platforms, you see these extensions more and more, but here on eToro, it's not that complete, so I'm not going to add that to the chart anyway. So as you can see, this works very nicely. So let me just go and, for example, check gold. Okay. You can see the same patterns are very nicely visible. Sometimes we have some events that, you know, the uptrends just keep going and going. But most of the time, like here, you can see wave 1, 2, 3, 4, 5, and this is very nice. Just if you also want to check on other platforms like TradingView, you can see again that, for example, Caterpillar, at the moment we are looking at that. We have wave 1, 2, 3, 4, 5, and then go on. This 3, maybe we can dismiss this one. If you, sorry, go back to S&P 100 again, and I want to change the type of the chart to candle. Then you can see any wave 1, then we go sideways, and wave 3, then we go sideways, and 5. So, but bit inside each wave, for example, in this one, if you go and just zoom in this wave, you can see again we have 1, 2, 3, 4, 5. And if you change the time frames and go to 4 hour and 1 hour, and just make it smaller, smaller, you can see that pattern happens all the time. So it's good to know this theory. As I said, this is a theory. It works most of the time, but it's going to change lots because since Mr. Elliot made this theory, many bots now trading instead of us as human, and they don't care about many of these emotions, and things change a bit, but still useful, and you can use it as long as you know it works. So yeah, that was all about um, Elliott waves and the theory and strategy. So how to use it. I hope you learned something and you can use it in your trades. Have a nice day. See you later.